All right, today we're breaking down a framework for what could be the next major altcoin market cycle. We're not just going to look at a list of coins to buy, but really dig into the mindset and strategy you'll need to navigate what's coming, both the massive opportunities and, let's be honest, the huge risks. So, here's how we're going to tackle this. We'll kick things off with the psychological traps that catch almost everyone. Then, we'll look at the pure math behind why altcoins have so much potential. After that, we dive into the good stuff, a watch list of potential winners. Then, crucially, how to survive the ride. And we'll wrap up with why this window of time, right now, is so important. Okay, first up, let's talk about a feeling that, well, I'm pretty sure every single person in this space knows all too well. It's the pain of staring at your ghost portfolio. You know, the one made up of all the coins you almost bought and all the money you almost made. You've been there, right? You're scrolling and you see it. That coin you spent a week researching, the one you decided to pass on, is suddenly up something insane, like 600%. And you just can't help yourself. You do the absolute worst thing you can possibly do. You open the calculator app, you punch in the numbers, what you would have invested, and that number staring back at you, man, it just creates this pit in your stomach. That pain is a powerful thing, and it's what fuels almost every bad decision in crypto. Now, that kind of pain often sends people running for cover, right? Straight into the perceived safety of blue chips like Bitcoin. But here's the thing. If your goal is to actually create new wealth, not just preserve what you have, the simple math of it all tells a very, very different story. And this is why. It's just the law of large numbers. For Bitcoin to do a 10x from here, its market cap would have to swell to something like $12 trillion. That's basically the value of all the gold on the planet. You're trying to move a mountain. But for a small cap altcoin to 10x, it only needs to get to around $1 billion. It's like moving a pebble instead of a boulder. That's where the potential for explosive growth really comes from. And what's really interesting is how this money tends to move. It's not random. It follows a pattern. Think of it like a waterfall. First, the big, safe money flows into Bitcoin. Then, as people take profits, that capital rotates down to the next level into Ethereum. From there, it spills over into other big projects. And then finally, that capital turns into an absolute flood that rushes into the high-risk, high-reward small-cap market. The whole game is to be positioned before that flood hits. So, the multi-trillion-dollar question is, where is that flood of liquidity going to go? Now, we get to the fun part. We're going to dive into a watch list of 10 specific projects across 3 key sectors that are all aiming to tackle massive, real-world problems. First up, AI infrastructure. Look, the AI revolution is happening, but it has a huge bottleneck, a desperate need for more computing power. Right now, just a handful of giant companies control it all. The massive opportunity, then, isn't just in building AI, but in selling the decentralized picks and shovels that the entire revolution runs on. And the first name here is Render. The easiest way to think of it is like an Uber for GPUs. It lets anyone with a powerful graphics card rent out that computing power when they're not using it. It's widely seen as the blue chip leader in this space. Next up is Akash Network. So if Render is the Uber for GPUs, Akash is kind of like the Airbnb for entire servers. It offers decentralized cloud computing that can be up to 80% cheaper than Amazon Web Services. For any startup trying to get off the ground, that is an absolute game changer. And then you have Fetch.ai. This one is a little more forward-looking. It's all about creating autonomous agents. Imagine telling a piece of software, hey, find and book me the best possible trip to Italy next spring. And it just goes out, negotiates, and pays for everything on your behalf. That's the economy of things that they're trying to build. Okay, our second sector is real-world assets, or RWA. This is a huge narrative. We're talking about bringing traditional financial assets, stocks, bonds, real estate, onto the blockchain. And frankly, when the CEO of BlackRock, the world's largest asset manager, says this is the future, you should probably listen. A key player here is Ondo Finance. Think of Ondo as a high-quality, regulated bridge to the world of traditional finance. They take super safe assets like US Treasury bonds and bring them on-chain. This gives crypto natives access to stable, reliable yield from the real world. Pendle is a bit more advanced, but it's a really powerful idea. It basically lets you separate an asset's future yield from the asset itself, and then trade them as 2 different things. It's like, imagine selling the rights to the next 5 years of rent from a property you own, all at once, for a lump sum today. Pendle is building those kinds of powerful financial tools for crypto. Of course, none of this tokenizing of real-world stuff works without trustworthy data, and that is where Chainlink comes in. Link is the undisputed industry standard for oracles. It's the plumbing that brings reliable, real-world data onto the blockchain. Big institutions aren't going to trust some random startup for their price feeds. They're going to trust the established giant. You can basically think of Chainlink as the Google of this space. And that brings us to our final category, the speed demons. This is the constant holy grail hunt in crypto, right? The search for the next big dominant layer 1 blockchain. Back in 2021, everyone was searching for the next Ethereum. Now the big question is, who's going to be the next Solana? One contender is Sui. This project was actually built by the ex-Facebook engineers who worked on the Libra project. Its big selling point is that it uses a special programming language called Move, which was designed from scratch to be safer and prevent a lot of the common hacks and exploits you see in the space. Then there's Sei, which has a very singular mission: be fast. It's not trying to do everything for everyone. It is purpose-built to be the absolute fastest possible layer for decentralized trading applications. Think of it as the foundational infrastructure for future on-chain stock exchanges. Kaspa is sort of the dark horse in this race. It's trying to do something really ambitious. Combine the decentralized security of Bitcoin with the super-fast speeds of a network like Solana. It does this using a unique technology called a block DAG, really trying to give you the best of both worlds. And finally, there's Celestia, which represents a whole new trend of modular blockchains. So Celestia doesn't try to do everything itself. It focuses on just one critical piece of the puzzle, data, and lets other developers easily build their own customized blockchains on top of it. It's not building the city, it's selling the bricks and mortar to all the builders. Okay, deep breath. That's the watch list. But let's be very clear about something. Picking the right coins, that's the easy part. It's maybe 10% of the battle. The other 90% is having the psychological fortitude to actually hold on and profit from them. So why is that? Why will the vast majority of people, even if you handed them a perfect list of future winners, still end up losing money? Because having the right information is not enough. Holding a volatile asset is pure psychological torture, and most people are just not prepared for that ride. And this right here is exactly how it happens. You buy an asset, it immediately drops 35%. Your lizard brain takes over, screaming, "It's a scam! Get out before it goes to zero!" So you panic sell at the bottom, locking in your loss. Then you watch in horror as it recovers and rips to a new all-time high. Now a different voice screams, "You're missing out! Buy back in now!" So you FOMO buy the new top. You have just perfectly sold the low and bought the high. This emotional cycle is literally the machine that transfers wealth from the impatient to the patient. So how do you survive this? Here's a simple pre-flight checklist to use before you even think about buying. 1. Check for any big token unlocks coming up that could flood the market. 2. Go into their Discord or community channels. Are people actually building things, or is it just hype and price talk? And 3, and this is by far the most important rule of all, it's about how you manage your risk. The 1% rule. Never ever put more than 1 or 2% of your entire net worth into a single speculative altcoin. This gives you what's known as an asymmetric bet. Your downside is capped. If the coin goes to 0, you lose 1%. It stings, but you survive. But your upside? It's unlimited. If that 1% bet goes 100x, it can have a life-changing impact on your entire portfolio. So let's end on a final thought about this specific moment in time. The big institutions are coming, we all know that. But they move like giant slow-turning battleships. That gives regular investors like us a huge speed advantage, at least for now. And it means the biggest risk you face might not be picking the wrong coin. It's waiting on the sidelines for a level of certainty that will never arrive. Because in these markets, you have to understand that clarity is expensive. By the time an opportunity is perfectly clear and obvious to everyone, the life-changing gains are almost always gone. Uncertainty is where the opportunity is. So you have to ask yourself, what's the bigger gamble? Taking a few calculated risks, or taking no risk at all and guaranteeing you miss out?